Hey, it's Mike, and today I want to do a video about how to trade penny stocks for beginners. This is a 2020 edition, and the reason why I want to make this video is because I noticed that a lot of new investors want to get into trading penny stocks. And so I wanted to do just sort of a brief overview on how to get started, and more importantly, how not to lose a lot of money trading penny stocks, because it is very easy to lose a lot of money. The allure with penny stocks is these stocks are extremely volatile and there's a chance for outsized gains, but there's also a chance for outsized losses. So at the very least, I can help you not lose a lot of money and hopefully at the very best, make some money trading penny stocks. So of course, I just want to say as a disclaimer, this is for entertainment purposes only. This is not a solicitation to buy any specific penny stock. So with that in mind, I'm going to assume that you know a little bit about trading stocks already, that maybe you've opened a Robinhood account and you've traded a couple of stocks and now you're interested in penny stocks because you've seen the big gain. So I'm going to assume that you know the fundamentals of what a stock is and how to buy or sell a stock. So what exactly is a penny stock? A penny stock is traditionally referred to any stock that's trading under $5 a share. So if you look at a stock is trading at $3 or $2, $1 or 50 cents, those are all considered penny stocks. And because they're all penny stocks, these stocks usually are not covered by mainstream financial news outlets because these news outlets they don't want to be seen as manipulating a stock that's usually that has a small market capitalization, that the company's worth usually under $1 billion. So they don't want to move these markets. So that's why you don't see a lot of talk about these penny stocks. Now, with penny stocks, because they have a small market capitalization, there's lots of volatility and the possibility of manipulation. And I'm going to talk a little more about manipulation and pump and dump schemes and how you can avoid becoming a victim of a pump and dump on a penny stock. So you can find penny stocks on the major exchanges, including the New York Stock Exchange, NASDAQ, as well as what's referred to as the OTC or the pink slips. Now, the pink slips, I'm already going to tell you right away, do not trade any penny stock on the pink slips, because the pink slips just about anybody can list a penny stock on the pink slips. This is over the counter. These are not on exchanges. There's very little regulation. There are a lot of frauds on the pink slips. So if you see any stock that has OTC next to it or it's on the pink slips, just avoid it. Do not touch these. You are more likely to lose money trading OTC penny stocks. So the thing about penny stocks, the things that allure a lot of people to, is that you can have penny stocks that move 100% up in a day, but these penny stocks can also move down 50% in a day. So when you do trade penny stocks, you have to accept the volatility on the upside as well on the downside. These penny stocks do not move in one direction. They don't move up every day. So you have to be prepared to deal with the volatility. So for instance, if you own a regular stock like Apple, you accept the fact that Apple can move up 2% in a day and it can move 2% down in a day. On occasion, Apple can move up 5% in a day, and on occasion, it can move up 5% down on a day. When you deal with penny stocks, you almost have to multiply that by 10, where a penny stock can move up 20% in a day and move down 20% in a day, and on occasion move up 50% in a day and move down 50% a day. It's almost like trading an option, except you're using a penny stock. So let me give an example of the volatility, the typical volatility that you can find on a penny stock. So let's say you have this penny stock, I'm just making it up, ABC penny stock, moves up 20% for the week. That's great. I mean, any stock that moves up 20% for the week would be awesome. However, this is how penny stocks move, okay? Let's say ABC penny stock started at $2 a share for the week, and on Monday has a huge update, maybe some big news or something. It moves up from $2 a share up to $3.60 a share. Then the next day, naturally, after a big update, you get people who take profit and get out of the stock. So Tuesday, ABC stock moves down 40%, so it goes from $3.60 down to $2.26. And then on Wednesdays, the selling continues down from $2.26 now to $1.81. Now it's down for the week. However, on Thursday, you get some recovery now because you had a lot of selling. So Thursday, the stock is up 12% back to $2 where it started. And then on Friday, it picks up again. You get some buying, and it moves up 20% from $2 to $2.40. So at the end of the week, ABC stock went from $2 a share on Monday to $2.40 by the end of the week. However, the weekly range of the stock went from a low of $181 all the way up to $360. This is typical of a penny stock. Yes, it moved up 20% of the week, but you have to stomach the fact that it went all the way up to 360 and all the way down to 181. That's the world you're dealing with penny stocks. So, how do you find these wonderful penny stocks? Now that I tell you that they're very volatile and some of them are frauds, um, here's what I do, and I've been trading penny stocks for a while, and I just find the easiest path to finding a good penny stock to put on your watch list is to go to like a big penny stock dedicated website. So, for instance, pennystock.com, it's been around forever. They do a lot of the research for you. You'll find articles for penny stocks to watch, and you just read those articles and you look at those stocks and you put them on your watch list, and you want to go to the website of these stocks and see what the company does and why it's different and why it might be a company that may outperform in the future. Now, the one thing is, the one place you do not want to do your research is any forum, any Wall Street bets, any penny stock forum, because these places are filled with scam artists who do something called a pump and dump scheme, where they'll take a penny stock, they'll tell you this is the greatest penny stock in the world, you got to buy it, they're coming out with big news. And what happens is you start buying that penny stock, and the people who touted the stock, they're selling the stock as you're buying it. So as the stock is going up, they're selling, and eventually people will figure out this stock has no news. It's not even there's no reason to buy the stock, and then you're left holding a stock that's going to collapse on you. So avoid the penny stock forums. Just to go to big places like pennystock.com, do your research, and from there you'll have a watch list. Now, from your watch list, you'll want to figure out which penny stock or penny stocks that you want to buy. What you want to do is that just explained the pump and dump. You want to focus on two types of penny stocks companies that have a disruptive technology or disruptive service, and also penny stocks that are in an uptrend, that they're moving upward in price. So to find a stock that's penny stock moving upward in price, you want to find a penny stock that's above the 50-day moving average, and the 50-day moving average is above the 200-day moving average. This is a well-performing penny stock that just keeps moving upward. These are the stocks that you want to focus on. You do not want to focus on any penny stock that was at $20 and now is sitting at $3. Some people buy these stocks saying that these could be great turnaround stories, but there's more than a 50% that penny stock that fell from $20 a share to $3 a share will soon be at $1 a share. What you want to find is a penny stock that's been at $1 a share 6 months ago and now it's at $2 a share, and it's above the 50-day moving average, and the 50-day moving average is above the 200-day moving average. Statistically, those are the penny stocks that are more likely to move up. Also, check if there's rising volume. You want to trade a penny stock that has action in it. You don't want to be trading a dead penny stock, because if there's dead volume, then that means there's going to be dead money. And also, that stock can move too quickly on volume. You want to have rising volume. You want to have a stock that people are trading into, because that'll give you the liquidity that you need to get in and out at a good price. So finally, you just want to be sure, sit tight and take the big swings. If you're trading a regular stock, you can stomach a 2% or 5% move. When you're trading a penny stock, you have to stomach the 20% and 50% moves. So in order to stomach those big moves, you only want to use speculative money. So if you have $10,000 in your Robinhood account, don't dedicate more than $1,000 or even $2,000 to penny stocks, or any amount that you're okay with losing. Because yes, you could take that $1,000 and turn it into $2,000 pretty quick, but that $1,000 could also turn into $200 pretty quick. So with penny stocks, only use speculative money. So that's my simple overview on how to trade penny stocks. I didn't want to go too deep into it because you really don't need to get too deep into it. You just have to learn, avoid the pink slips, go to a big site like a pennystock.com, create a watch list, only use stocks that are moving upward and have rising volume, and be sure to accept the big volatility in these penny stock moves, and you'll be fine. And also just watch my videos, because I do news on penny stocks on the move. That'll help you create a watch list. So if you want to go ahead and subscribe to my channel, I do updates, multiple updates every day on hot stocks, not just penny stocks, but also big disruptive stocks, just anything that you should definitely take a look at when trading. Okay, so be sure to like, subscribe, and turn on notifications for this channel. Okay, thank you very much. Bye.